everybody. Welcome to another Market Movers by Get Rich podcast. And today, it's December 5. We're just going to give you some of you updates on what's happening sa market. And malapit na yung Pasko, guys. So, just a few more days. So, let's get started. Edmond, kamusta?
Freezing my mind in Japan. And I think you can see the impact, right? I think coming from the ban on, well, not really a ban, but like this fight coming from China, I think you're seeing this impact happen from all the Chinese tourism. But anyway, we'll get through more about Japan later on.
Yeah. Sige. So, just a few headlines for everybody here. It's really more of a macro and local news. Since Edwin is Japan, we're going to be talking about Japan again and some expectations for next year on what's happening sa mga central banks. We are seeing QE, or printing. What does that mean? So, let's cover a little bit about that today. And of course, some local news, delisting, dividends, and buybacks. How would you want to start this off, Edmund?
Okay. I think one of the most important parts that is happening in today's global macro is really on the Japan bond market. Now, normally we don't find too much of a concern where things are slowly going up. We're always worried about when we're seeing irrational moves happen. And it looks like the long term, especially for Japan, is the one that is really concerning us because of the how fast it's unwinding. And basically what's happening here, this unwinding of this carry trade that is happening in Japan, obviously is affecting all borrowing costs all over the world, especially in the emerging market. Because normally what people do is borrow 0% interest rates in Japan and get in and to have a bigger carry trade outside. We're seeing a lot of this unwinding happen right now. And to what extent, obviously, is what everybody is watching. In case everybody doesn't know really the irony of Japan today, the real economy, despite the Chinese tourism and everything that is happening, really is in a difficult spot. Why? Because if you look at the exports, manufacturing, it's still in negative territory. And largely because of, especially in the high tech, especially in innovation, Fanuc, I think we talked about this before, where Japanese companies are actually shutting down also in China. And the main concern, obviously, for this economic or export weakness is Chinese, for example, like on the EV sector, on the automobiles, affecting Toyota, etc., etc. Plus, you have tariffs happening in the US, which is also affecting US purchasing of Japanese automobiles, right? So what did Japan do? In light of this weakness, what they're doing now is putting a 130 billion stimulus, right? Which is exactly what is happening today. Now, a lot of people are concerned because now you're printing more money or putting in more stimulus at the same time, which is supposed to be doing at zero interest rates. Now, you're also raising interest rates. So it's like you're spurring inflation while raising borrowing costs at the same time. A lot of these things are not happening at the same time, I would say, meaning when you talk about fiscal policy, especially in this $120 billion budget, it's usually mostly targeted towards the lower income bracket. It's very different because when you're increasing or decreasing interest rates, normally widespread on the economy and the corporate end. So I think the target really of this 120 billion budget is really to provide better impact towards the lower cost income brackets, especially those that are getting hit from higher cost of living. I think it's very targeted on that end. What's more important is how markets are reacting, in my opinion. So we could say that everything is short term. Japan be able to pull this off in the long term. That's a different question. And for me, the more important part about that question is to figure out what the market is thinking. And from the market reaction, especially from the movement on the interest rates, we'll have to make an assumption they don't like it. So where this will go and where this will end, I think is what everybody needs to watch. Because as of today, if I'm not mistaken, US still has what, 700 to $800 billion worth of US Treasury. So this is just one part that they might start to unwind. It's just everything else. I think it's also part of the reason why you're seeing weakness happen in Philippine Treasury also as of late. I mean, I think the story and the corruption is slightly priced in already. I think the reason why we moved this week was because of the unwinding happening in Japan, in my opinion. Because we all know, I mean, everybody follows interest rates and borrowing costs. Hopefully, it doesn't spiral out of control.
So what we're seeing today is really just a wait and see moment for what's going to happen sa contradiction that's happening in Japan.
Yes, I think that's also part why markets are a little bit risk off across the board.
Right.
And that's why volumes have also been very subdued.
So is it also because, seasonality na December na, year end, you're seeing some uncertainty, so just people just want to be in the sidelines?
I don't know, Hannah. I guess partly, more importantly than seasonality, I think is long-term factors, right? And I think that's what we're still having wait and see mode and clarity on where this is going to end. Last time we've seen something spiral out of control on interest rates, in my recent memory, was probably the UK. because of the pension fund.
Mm.
Because everybody was worried that the UK pension fund, I think in 2022 or 2023, was going to spiral out of control and cause a bankruptcy on the pension fund. But once that finished, everything else started to rally. Again, going back to what I said a while ago, people don't want to see significant moves happen in a short amount of time, right? If it's going up slowly and what we like to call channeling, that's okay. We just don't like to see when they're seeing big spikes
Right.
happen, especially on the fixed income side.
Okay. So that is on the interest rate side. And of course, one of the things that we are also seeing, the other side of the interest rates is the printing of money. So is that something that we can expect for next year? Because that's what we're seeing in the headlines, Edmund.
Well, we're seeing a record high
Yeah.
QE happen all over the world, led by China today. If you look at it, this concern on inflation, it looks like it's also dying down in the US. Many individuals are already pointing into the second half of 2026 already, once we get a full year impact happen from the tariffs, right? I think the market is already pricing all of those short term inflation elevation in the short term. And I
Yeah.
think they're already looking at the second half of 2026 to 2027, where, okay, I think things are slowing down and inflation is likely going to head lower. With that being said, why is treasury yield still elevated? And I think everything right now is pointing out to Japan's unwinding of the carry trade. That is how things are related, in my opinion. I could be wrong on this, but this is what I am seeing from how the markets are reacting as of what we speak. Where am I? Which camp I am in? I'm in the camp where we're really seeing a slowdown and inflation is going to come down across the board. I'm in that camp
Yeah.
because people can talk about US AI productivity. People can talk about how GDP growth is going to accelerate because of AI. And 90% of GDP growth this year, especially in the US, was AI driven. I agree. I think AI will increase GDP growth and increase productivity. But I also think it will also be deflationary, not
Right.
inflationary. And part of this, where I'm leaning, is because of China as well.
Yeah.
Because
Yeah.
really, and I think this is the biggest mega trend not being talked about as much as I'd like to see, which is China deflation, which is they're exporting deflation through the rest of the world. And I think
Mm.
that is a bigger concern that everyone else needs to face more than the story that's happening with Japan today.
Yeah. All right. Let's not go into that because we're gonna go into big rabbit hole if we talk about the mega trend of China. Yeah. Let's take a look at local news. One company lists here in the Philippines and then one other delists, but we're seeing more delisting happen in the Philippines. And there's a talk in town that FGEN Dow. What can you say about this?
If they're gonna delist, all I ask for is that they tender offer similar to the price that KKR bought into it. I forgot
Mm.
when. I think it's like a couple years back. Sorry, not a couple years. I think it's been pre-pandemic pa ata eh. Correct me if I'm
Mm.
wrong on this pile.
Great.
But
Yeah.
that price, if I'm not mistaken, was north of $30 per share. Even if it comes close to that, I hope they do a delisting at that price if ever that happens. Now,
Mm.
with that being said, I also agree. I think it's a challenge. I think we talked about it in the last podcast about trying to keep more companies listing and keep them listed rather than them delisting. Maybe you can share your opinion on this delisting pile.
I was looking at to it, yung KKR deal. So they acquired 11, at least almost 12% KFGen. And the price was about 22.5.
Oh, sorry.
Ako, when it comes to the listing, parang in my view on that is you listed on the stock market to raise some capital and then you have already public shareholders. And then after a few years, like even if the market is not pricing in your company at a value that you want, and then you're gonna delist. It's like, you just raise some capital and then once you got the capital, you use it for growth and then you're gonna delist. So I'm really not a fan of delisting. So sana hindi mangyari. It's because, FGen is a quality company, pays you dividends. And of course, we've been covering this. It's a power company. We need more companies like this in the stock market.
And probably in relation to that, companies that have really done well, maybe in the short term, have been your utilities, right?
Yes.
AP, Meralco, Maynilad, also Manila Water, and they all point out to the same theme: buy defensive, buy yield.
Yes.
And again, that has been our advice for people investing in the stock market.
I hope this won't happen because okay lang kung small company na hindi siya utility, hindi siya defensive, it's not in theme today, that it's not option for investors today. But since one of the options, so ikaw, do you think it's going to push through or
I don't know.
sign?
They did it with EDC, and just to let everybody know, it was one of the first companies that I bought back in 2007. They did it with EDC. They did it several times, if I'm not mistaken, with first gen.
Yeah.
I understand you talked about a 2250, but I do remember them coming in at 30 plus at the initial tranche. I forgot when,
Mm. So they
but
had the October 2021 deal na 33 pesos then per share.
yeah, see,
Dalawa
that's
pala,
a
yeah.
yeah,
Dalawa,
yeah.
oo.
So that's the part where we also noted about them coming in. But don't get me wrong, I think yield and dividend and defensive is still going to be the name investment priority for people who want to participate in the Philippines.
Yeah.
That's also the reason why SGP is also coming back and roaring, because they're issuing what, 35 cents cash
Yes.
dividend per quarter.
So
That's give or
securing
take.
second dividend for the year.
Exactly. And they're still going to pay out 8.7% based on current share
Mm.
price. Our people who are going to invest in the Philippines need to get paid to wait. In my opinion, it's a no-brainer as to, I mean, we talked about this, I think, in a podcast, but
Yes.
asking about SGP. I think we were talking about that it's a little bit overbought. And then as it dies down, maybe you can find ways to participate, because at the end of the day, if it continues to pay out that type of cash dividend, it's worthwhile investing into SGP.
I think what's good about SGP today is last year kasi hindi nagbayad ng dividends eh. And this year they're becoming more consistent with it. And of course that now that we know that Maharlika is really invested on it, but they're also expecting that these companies will pay out so that they have that return, that yield from their investments. So currently, what do you think about the chart of SGP now? Ako kasi personally, it just, it rallied because of the news, diba? It was kind of a surprise then they announced dividends. And maybe if you're looking to participate on this, just wait it out. Yeah,
Well, I
but
don't
it
think
should be
it's
on
really
your list.
coming as a surprise. I think it's
Mm,
really coming after every single quarter, like they did
right.
prior to the concern on the extension. Now that, like what you talked about with Marlik already, resolving most of the short term issues and even long term issues in the stock, I think we might continue to see more confidence into SGP. Again,
Mm,
these stocks are just a buy low, sell high type of
yes.
companies, right? I'm not too worried about it. It's just finishing its consolidation here.
So aside from dividend narrative, one of the things that we always see here in the Philippines are company buybacks, the never-ending company buybacks. And Edmund, when I was doing some research, no, RHI has been averaging peso cost averaging already on that stock for the past 5 years. And recently, they also announced that they are going to allot 2 billion pesos, or it's about 3.3% of its current market cap.
Tatawa na lang ako. I've never seen this many buybacks happen in a long period
Yeah,
of time. SM Prime,
yeah,
RHI, the T family and Metrobank, AGI, all tycoons buying back their shares, and share prices are falling like a rock. Even companies like what I really, really like, for example, like DNL, today pay out 6.8%
yeah. It's already
cash
in this.
dividend.
Yeah.
The owners are buying back every day, yet the share price is also falling every day. It's just, I guess it is what it is, right? Again, if we're investing, the goal here really is looking at it from a long-term perspective, right? Nobody
Yes.
really knows what's going to happen to these companies at the end of the day. I guess you can just see it as a vote of confidence for the insiders.
And can I just add a note in RHI? But you have RHI, you have RLC, and you have RCR. But do you know RHI is paying the highest dividends among the three Robinson names?
I don't know if that's a
So,
good thing or a bad thing, Pyle.
I mean, like we say kasi, diba, if it's paying you to wait and if the companies, if owners are buying back, just a note, diba? So it was really crazy to me na parang, wow, a holding companies paying more dividends than its property and REIT side counterpart. Yeah, so
Just because
RHI
of
is
how much RCR also went up in the short term.
yeah,
But I think if
crazy.
RCR today is 5.2, 5.3% na lang
Yes.
diba?
Yeah. RHA is just one of the examples that's doing buyback. We don't have the summary here, but I hope you guys get the point, right? RLC is paying what? 4.7. So that is it for market moves. Any note from you, Edmund, before we say goodbye?
Maybe coming from what we talked about a while ago, I think volumes for markets could just be very low in this holiday season. I think everybody's just taking it easy just because of the amount of volatility that we're seeing happen
Yes.
across riskier assets, right? I think you're seeing it happen on Bitcoin, on the cryptocurrency
Yeah.
market, where there's just heavy volatility happening. And if you
Yeah.
read the headlines, for example, the crypto, most of everything that's happening is all on the leverage. So meaning those that are shorting and getting wiped out, those that are long leverage are also getting wiped out.
Yeah.
I think in terms of how the big boys are really moving today, everybody is just asset allocation, nothing doing anything drastic,
Yeah.
and probably just staying invested.
Yeah.
And I think it's the same thing that you guys should be looking at. If
Yeah.
you're viewing this as a speculation type of environment, I just, I don't know, right? Again, if it's investing, then that's different. It's just that from a global perspective, I think hinay-hinay lang and take it
Yeah.
easy for the rest of the holidays.
Beautiful. Thanks, Edmund. Enjoy your stay in Japan. So that is our this week's market movers, guys, and we'll see you in the next.
Bye, everyone.